The S&P 500 just underwent their quarterly rebalancing. In today's video, we're going to take a look at my results from investing into the S&P 500. What went on in this December rebalancing, who's in, who's out, who almost made the cut, and how I plan to move forward when it comes to my investments. I am Lisa J. Stocks, and if you enjoyed today's breakdown, make sure you like, subscribe, and hit that notification bell. Okay, starting with FXAIX, the Fidelity 500 Index Fund. This is one that I have in my retirement account, an IRA over at Fidelity. And when it comes to this position, I'm up 49.46%. The total value of this portfolio is $170,672. I currently hold 747 shares with an average cost of about $173. This is my foundational investment when it comes to all of my retirement portfolios. One that I'll just be letting sit and build on its own from this point, letting those dividends get reinvested to build up my position, as well as that steady continual growth. Now, there are ups and downs when it comes to the stock market. Definitely could have a few negative years down the road, but this is an investment that has proven itself that it always recovers. Now, VOO. I hold this in a taxable account because I have different goals when it comes to building my portfolios and didn't want everything tied into that 59.5 age. In this account, I have 20 shares of VOO, which is the Vanguard S&P 500 ETF, exchange traded funds. I'm up 44.99%, a gain of $3,914.32. with an average price of $435. Now, when it comes to both of these investments, I also receive a quarterly dividend. As I've already mentioned, that is getting reinvested and helping me to build up my positions. When it comes to FXAIX, my last dividend payment was $500.64, which was enough to pick me up 2.1 shares. And when it comes to VOO, my last dividend payment received back in October was $34.54. Both of these positions are rather built up, deep enough into profit that they're always in the green and working quietly in order to continue growing by that compounding effect. A low stress way for me to make sure that my portfolios have stability. Those are my results. Now, let's get back to the rebalancing of the S&P 500 that just took place for December 2025. So when it comes to this index, they have a committee and they check to see who qualifies and updates the index on a quarterly basis. They look at the market cap, liquidity, and other factors for 4 straight quarters of GAAP profitability. This is how they ensure that this fund is holding those 500 strongest companies. First, there are a few names that you might have heard rumors about potentially being included into the index. When I looked up who was close to making the cut, these 3 were most notable to me: SoFi, MicroStrategy, and Snowflake. But none of them quite met that requirement when it comes to the GAAP profitability. So many people are holding those investments because they believe in the company, but also because they are expecting that index boost, but they didn't get it this time around. Okay, so those are the ones that were close to making the cut. Now let's look at the actual winners. And those companies are Carvana, BRH, and Comfort Systems USA. They've all earned their spot in the S&P 500 because they met all of the rules that were required. Carvana and CRH are now meeting that valuation, and Comfort Systems has been promoted up from that mid-cap 400 range. And just to let you know, when new companies are added, they're not automatically going to be far down at the bottom of that list of 500 top companies. Their ranking is determined by the market cap of the company at the time of entry. And when it comes to these new additions, they're going to be getting a boost from that buying pressure because these funds have to go out and buy shares. So just to touch on those companies that will be removed, none of which were familiar to me. We have LKQ Corp, Solstice Advanced Materials, and Mohawk Industries. So now we've taken a look at who almost made it, the new additions, as well as those companies that have gotten kicked out. Let's take a quick look at those companies that are still leading when it comes to this fund. Those top 10 holdings, about 40% of the fund is held by most names that will be familiar to everyone, including NVIDIA, Apple, Microsoft, Amazon, Broadcom, Google, Meta, Tesla, and Berkshire Hathaway. So it is a very tech-heavy fund, and that's because it's weighted by market cap. And these are the companies leading. When it comes to investing into the S&P 500, my strategy going forward is no change. I'm going to continue holding on to both of these positions. My FXAIX, a foundation when it comes to my retirement portfolios. No stress, always recovers, those quarterly dividends coming in and being reinvested, and then VOO, a liquid position that I can tap into when I'm ready, flexibility outside of retirement age. So in addition to these funds, I do hold individual companies, my blue chip stocks, as well as more aggressive ETFs with more growth potential, like my SPMO, which is a momentum ETF, and FSPGX, which is the Fidelity Large Cap Growth Index Fund. So by investing into funds, they rebalance themselves. We don't have to put in all of that work of choosing those winners. You have a committee at work doing that stock picking for you. And both of the funds that I've shared here today both have a low expense ratio. Another that you can consider that I always like to mention is SPYM, formerly SPLG. They changed that ticker symbol, and this has a lower share price than VOO and also a slightly lower expense ratio at 0.02 if you want to go with an ETF for S&P 500 exposure. So current share price, $80.66. When it comes to SPYM, FXAIX is $239.14 per share, and VOO ended the week at $630.48. So leave me some comments. Let me know your thoughts on investing into the S&P 500. Do you invest strictly for retirement, or do you do a mix like me and also build up positions into taxable accounts? When it comes to these three new additions to the S&P, I was only familiar with Carvana, which is an online auto retailer. I've been seeing those commercials and knew it by name. But BRH is a leading global building materials company, and Comfort Systems USA is a mechanical and electrical contractor. So even though it is tech heavy, you get diversification, exposure to a broad range of industries by investing into the S&P 500. Thanks for watching. Make sure to leave me some comments and check out my referral links. They will be in the description and pinned in the comments. Okay, bye.